Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing.
This is Aaron Edwards, Santos Springs, March 24th, 2026. Man, Monday's session was not for the faint of heart. Quite a doozy. We got a lot to cover. First of all, we're going to start with our recommendations on sales in the corn market. We've gotten a lot of work done in the bean market. It's time to get some work done in the corn market. Let me share the screen and we'll go over that real quick. Okay, so let me get a highlighter here. It'll just make our life a little bit easier. And we'll go from there. So let's go with yellow. Okay, exit long May futures. I should have written here corn. If you've been following the recommendations, you would have a re-ownership position in corn in the May futures. We're going to exit those. Depending on exactly where you got in, those are probably a little bit profitable or close to a break even. If you're still holding on to long futures, let's get out of those. I know I've corresponded with many of you and you're already out of those. But if you do have long positions, let's get out of those. And then the other thing, which is actually, we're going to have some little Q&A at the end. If you've been following the recommendations, you very likely have some basis contracts against the May. We're going to lock in 50% of the futures on those May basis contracts. So those would have been March contracts that we rolled to May, and now we're locking in the futures. We'll do half of those at this time, and we'll punt on the other half, hopefully get better prices down the road, but we want to make sure we get started there. Also, if you've been following recommendations, we have 30% of our quarter one bushels have been moved on basis contracts, which is this May basis contract, but we still have 70% to go. So we're going to get those done quarter one. A week from now, it's over, right? So it's time to get that done. We're going to lock that in. And it's not just because we ran out of time. We'll look at a chart. We're at pretty much the best opportunities that we've had to get that done. So it's just as we come to the finish line of quarter one, it's also the strongest corn market we've had, or pretty close to the strongest corn market that we've had. So it's the calendar telling us we need to do it and the market telling us now is a good time. And then finally, we've been chipping away here at some new crop sales. Let's get another 15% priced on the new crop, so that would get us up to 40%, not 40% of production, 40% of the bushels that we will forward price, right? 40% of the bushels we intended to forward price. We want to get up to that level on the new crop corn sales. So those are the recommendations that we want to go over. Now, we threw out this battle for acres. We'll probably do this for another week or two. We'll see. It was mainly a March thing, but we might keep this up a little bit more. As we look at this battle for acres, we've been analyzing the ratio between the soybean price for new crop and the corn price for new crop. And then we've been comparing, if we hold one steady at the extremes of the range, what would the price be? And then if we hold the other one. So let's just, for some of you, this is kind of a review, right? But let's just grab the highlighter here, go to green. Let's talk about soybeans, right? So soybeans, new crop soybeans, 1146. If we were to hold the price steady at 1146, that would give us, at a 2.3 ratio, that would give us 498 for the corn. At a 2.7 ratio, that would give us 424. That would be the price range that would be normal given this price for new crop soybeans. And then if we flip it, we say, okay, well, new crop corn 487. Okay, if we flip that, well, that would say new crop beans would be at a 2.3 ratio. New crop beans would be 1120, and at a 2.7 ratio, they could be all the way up over 1315. And then you say, well, where are we now? Well, right now we're at 235. So we are very close to the bottom or the lower end of that range. You know, between 2.3 and 2.7, we're close to that 2.3. And then you could say, okay, well, but last year that ratio absolutely got skewed. We had $5 corn and beans stayed way down there low. Yeah, but when it got skewed to that level, we all know what happened. Number one, it was the best time of the year to price corn. And number two, we had a ton of corn planted, and that massive corn crop is still weighing down on, well, at least old crop markets, right? So could it go below 2.3? Sure. But if it does, last year, that really pointed us towards, it kind of skewed the market, so to speak, when that thing. So it could go below 2.3, but I think it's likely to hold that 2.3 range. At least it has so far during the battle for acres. I do want to point out just kind of this price range as we look at this, because the point that I've been saying for quite some time is, if we want higher prices of corn, we really need to see beans going up. And now let's shift gears and let's talk about those markets. I want to pull up, first of all, the position of the funds. Speculators in the soybean market, they still have that really big long position, and that's friendly, but you could see they dropped roughly 16,000 contracts off of that. They're under 200,000 contracts sold. So they're still in the zone that is overbought. So it's still saying, okay, this price for soybeans is artificially high. We've been here a while, but they're starting to soften that up a little bit. And if you look at a price, if we look at the pricing chart, that's really the big picture. And this is maybe directionally, this chart that we're looking at, new crop soybeans, this may be the most important directional chart that we look at as we come up to the next couple of weeks. I mean, new crop beans, and I'll explain the thought process. Because here's the thing. Let's say that new crop beans can stay above the 20-day moving average. Let's say they can make light work here of this previous high and get up to 1180 or 1190 or knock on $12, right? Let's say that new crop beans can climb steadily higher. Remember what we saw there from the ratio? For the sake of easy math, right? If we get a $12 bean, that lifts the ceiling on our corn over $5, I'm guessing, depending on the ratio, right? So we can get higher ceilings for corn. We can get more wind in our sails if that 20-day moving average holds. But what we've started to see here, we've started to see speculators from their maximum point, we've started to see them lose interest. And unless we can get something to keep us moving up, we're sitting right there at the 20-day moving average. It won't surprise me if we don't kind of stay sideways, because a week from, the 31st, we have the quarterly stocks report, and I'm not sure that the bean market will play its hand before that quarterly stocks report. but we might really have a lot riding on that report, because unless we can feed the bulls and stay in an uptrend, if new crop beans come down, I think it will be hard to not have them drag corn back down. We have fundamentals there's a lot of corn out there. So if beans come down in that ratio, I just think it'll very likely, we're already at the limit. We can't have beans fall and corn not fall without skewing the corn market beyond that limit of the ratio. So can that happen? Yes, last year it did, and it kind of skewed the market. So directionally, will new crop beans hold this 20-day moving average? And if you want just kind of a line in the sand, you can see it's real close. Oh, sorry. It's real close to that 1140 mark, right? Can new crop beans stay above 1140 or not? That's kind of if they do, great. Maybe we have some wind in our sails. If they come back down, that next support here is under $11. And I'm guessing corn falls as well. So let's look at the corn market. There's good news on the corn market, which is the speculators. They tipped the scale and they're up at that level that's classified as overbought. They're over 200,000 contracts. So they're finally overbought. We finally have corn markets back up close to profitable prices. We've been waiting for over a year for this moment. And honestly, a lot of my hesitation this week is, should we be more aggressive on sales? Should we really be stepping in? And if you're looking at your numbers and you're saying this is profitable, I'm afraid this opportunity could slip by, don't hesitate to reach out. Maybe this is an opportunity that we should be more aggressive on. And if that's kind of your gut feeling, don't hesitate to reach out. We can talk about it, because the financial, we just have to keep your portfolio updated. We need to make sure that we're getting the work done. But we are overbought. It is the selling season. This could be, or maybe we already put in the high for the year. It could happen. I hope not. But let's look at a chart. With that context, let's look at a chart. And we'll do the bearish first, and we'll do the bullish second. So the bearish, here's the bearish thing. Probably the most bearish thing about Monday was it was a key reversal. And if we look at that trade, you could see that in the same session, this is May corn, in the same session, it took out the high, it took out the low, and it closed down. It was a very volatile session, and it traded lower. Now, coming after Friday's trade, it was a coin toss, right? We could have had corn absolutely explode higher, go to the moon. Speculators were sitting on long positions, or what happened, and we saw that. So there's bearish. Technically, it's a key reversal. I would almost say this market it's almost more characteristic of just a confused market. And what's confusing about it? Well, fundamentally, we have a lot of corn, but geopolitically, there's a lot of unknowns, and we still do need to raise a crop. We have the whole spring season ahead of us. So it's, okay, we know that fundamentals are heavy for corn. We know there's a lot of corn in the world, but 3 months from now, 6 months from now, will there still be a lot of corn in the world? What will acreage be? What will the crop look like? What's going to happen to nitrogen market, right? So all of these unknowns are making us wonder, okay, there's plenty of corn now, but will there still be plenty of corn this summer? Or will we be working through those inventories and wondering how we're going to make it through the following year? That's the conflict. And so technically, if you look at May, the first thing I wanted to point out is it's pretty close to the highest prices that we've had. I mean, this if you look at the prices the past week, are pretty close to the highest that we've had in a long time, back to that time, back to last spring. That's why we're getting work done. We had a key reversal today. This corn market could roll over. That is a risk. And again, this is weekly sales recommendations, right? The bullish bid, and this is what we all hope for, the bullish bid is that beans can stay in there and that corn will just tag this 20-day and then be back off to the races. And we do still have work to get done. But Monday's trade, very volatile, very concerning, and it's just making one decision at a time, and that's the move that we should be making at this time, in my opinion. That's looking at the May contract. Now we'll look at the new crop corn contract. Very similar story, but very similar story. It's just you see the pricing is kind of in this upper box here. That's about as good as it's been on that new crop corn, tapping just shy of $5. So high 480s and low 490s is about as good as you could have done there on the new crop corn, and we're just want to make sure we're getting quite a bit of work done in that pricing range. So again, 40% of the new crop bushels, not total production, but the new crop bushels is what we want to have priced here. What a year, volatility. Finally, we got volatility. Now let's just go to the summary part and wrap this up. All right, so we've been over the recommendations and the ratio. Now let's just look this over. Seasonally, for corn, it is a sell. For corn, the managed money finally is overbought, so that's a sell. And the trend for corn is up. For soybeans, seasonally, it is neither a buy nor a sell. Managed money is overbought, so that's a sell. And the trend, I'm going to go with up, but I'm going to actually go with neutral because it's sitting right on the 20-day moving average on the new crop. It's varying a little bit crop by crop. As we look at the basis levels have dropped during this last leg up in the rally. Strong prices over the last 2 weeks have been somewhat erased on the cash market by weakening basis in both corn and soybeans. This basis move reminds us that the rally is not led by tight fundamentals. The soybean market is sitting right on the 20-day moving average as it awaits acreage and quarterly stock numbers at the end of this month. The corn market had a key reversal in Monday's session and is holding on to an uptrend for now. With speculators overbought in both the corn and the soybean market, it is important that headlines keep feeding the bulls or we could have a sell-off. Before we go to the questions, I would just say that a sell-off at this time of year isn't necessarily that bad of a risk because we still have the spring growing season ahead of us. So a sell-off at this time of year is bad news unless there's a weather story. And most years there is a weather story. So it might not even be a huge correction to the downside, just a sell-off and then markets readjust, recalibrate, and then we're looking at spring growing season. And we do still have geopolitical conflict. So let's wrap up here with just answering some questions. We have corn with May basis contracts. Should we be concerned about redemption of those? Yes, let's do 50% this week. And do the rest later. New crop corn is 25% sold. Sell more. It's January 27 deliveries at $4.93. Yeah, so 25. I recommended another 15% this week to bump that up to 40. Beans, new crop is 50% plus sold. I think the specific recommendation is 60%, so 50 to 60%. I know we start getting into some yield things. Sometimes it's hard to fine tune that between 50 and 60%. So if you want to do a hair more beans, it's okay, but it's not a mistake to not sell more beans at this time. I mean, based on the recommendations, right? We hope for stronger prices in the spring, and I'm glad you've got a lot of work done. And then I said, all right, so the last thing was a comment. So I hope you have a great rest of your day, great rest of your week. These are times in the market that it's important to not be a stranger. If you have doubts, if you have questions, do not hesitate to reach out. There might be some nuances depending on your cash market, depending on your cash flow or whatever. We might need to do some tweaking or some fine tuning. So don't hesitate to reach out. Hope you have a great rest of your day, great rest of your week. And take a deep breath. It's kind of nice to have volatile markets because at least we have halfway decent prices again. Be safe.